Little bit of technical difficulties there, so bear with me while I get everything back up and running. Goodness. All right, sweet baby Jesus, please help me. Oh my goodness gracious, guys, there's always something. Always technical difficulty. We put these out in advance so that way you can find them easier, and then I clicked end broadcast just as fast as I locked into it. But hey, we don't have a good show unless we at least have one technical difficulty. Well, that's where it was. But at least I can join you with some great news. Welcome to the Bull Bear Brief. My name is Dave. Thank you so much for joining me. We have an awesome crew with us here today. I hope you found me well. If you're watching this at a later time, you're more than welcome to join our Discord. It's absolutely free. You can hear all of our comments, commentaries, and all the stock news. Keep up to date by hitting that like and subscribe, and click more at the bottom of your screen. Click the link tree, and you'll see I have a list of different things that you can do and you can join. Heart of gold, open mind. Join that Discord. Now you can see right here on my screen, bada bing, bada boom, we'll be making money soon. Today was another beautiful green day in the S&P 500. Now, I will have to revamp my vote, but the question on the last poll was, do you think we will head to all-time highs? I better just spell it out, all-time highs. And you're either gonna say, yes, we are heading higher, no, there is more pain to come, or we'll do the third one, I don't know, but I love the show. And we'll start that poll off now. I'm curious what the community thinks, so let me know, and then we are gonna go over a few of the things we're gonna talk about today, like what's going on with Palantir. I know it's everybody's favorite stock. It definitely seems to be a big one. A lot of people are talking about Palantir. We've been talking about Palantir for quite some time. The price action shows that Palantir could be our next leader in the market. We will see on that story. We also have what a bigger Fed rate cut might actually do to the overall volatility of the market. So we'll talk about that. And also, I don't know if you guys were aware of this, but the SEC is to vote next week on part of the US stock trading revamp. They're trying to change some of the ruling when it comes to stock traders. And the regulation is set to vote on the new ticker size rule. And we'll go into that a little bit. Also, we're going to talk a little bit about solar stocks, Microsoft's cloud AI, the AI chip growth story. We'll skim over that. And then, of course, we're going to talk about Occidental, because Occidental, I know 2 or 3 years ago, I think it was about 2 years ago, Warren Buffett was just really going into Occidental, and it hasn't moved much at all up until now. I pointed out to you last week that Occidental had a huge breakdown, as well as the rest of the Petro headed lower as well. So we'll dive deep into that, and we'll take a little peeky gander at what the old Occidental is doing. Then, of course, we have the pretend fight is over. That's going to talk about a little bit on a different side note, right? I have biases, you have biases, it's a-okay. This is about the pretend fight, like we're fighting the inflation, but that's not the issue. They're going to warn you of the US dollar crisis, the Fed pivot being a mistake, and it's a different kind of outlook onto my positive, always looking kind of way. So the first thing I always like to do, just so we know we are in time, let's take a look at the S&P 500 here, so that way we can see today is 9/12/2024. So if we're looking back at this at a later date, we know exactly what we are in for. Now, if we take a look at the S&P 500, you can see below a 21-day moving average, I was risk off. We missed all this down, this breakdown here, all this volatility down here, and then as we broke back up through, we are back to being risk on. So that way, so far, my risk on and risk off scenarios for the long-term portfolio clearly is showing a win-win situation for moi. Now, breaking below a 21-day moving average, we completely missed the whole Japanese carry trade. We also got back in, actually, I gotta be honest, I didn't really get back in until about right here, after we had that gap up, that true follow-through day, we'll call it. After that, got in, got back out, missed this whole dip, got back in, and here we are, okay? A lot of ins, a lot of outs, and sure, we could argue, why didn't you just stay in? You'd still be at the same spot. Well, because if we continue to head lower below a 21-day moving average, I want to make sure that my capital is protected first. So our first big piece of news is going to be about PLTR. Let me go ahead and bring up Palantir over here on this chart, PLTR. Now, the cool thing about PLTR is that it just got inducted into the S&P 500. When it got inducted to the S&P 500, it hopped right up here to new all-time highs before having continuation and now showing a bearish pennant on the daily. Would probably look a lot better on the hourly if we take a little peek. And it does. It looks a little better, but extended on the daily currently. So as we go through this, I'll give you the leisurely of actually looking at the chart while I read you about Palantir. And then, of course, we will always keep up on the comments, okay? So if you have anything that you want to say, after I'm done reading this article, I'll run through and we can chat it all up. So here we go. I'll just read it over here, and I'll try and give you guys a little bit of a visual on the stock itself here, okay? All right, Palantir Technologies shares are trading mostly flat as the company prepares to hoist with its fifth AIPC con. All right, if you don't know what that is, we're going to go into it in just a minute. It describes AIPCon event as a conference where customers participating in Palantir AIP boot camps showcase their work in Palantir's Artificial Intelligent Platforms, or AIP. The company said that more than 100 organizations will be at the latest AIPCon, including the National Geospatial Intelligence Agency, and more. Palantir shares have climbed more than 15% this week after it was announced last Friday that the company will be included in the S&P 500 index beginning on September 23rd. B&A Security Analysis Perez maintained a buy rating on the stock, buy and raised the price from 30 to 50 on Tuesday. We think that becoming a member of the S&P 500 could blah, 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 blah. We know people get excited, and if you give them reason to be excited, they're going to continue to be excited. Equity research analysis on the Wall Street typically use earnings growth and fundamental research as a form of valuation and forecasting, but many in trading turn to technical analysis as a way to predict models for share price trajectory. Some investors look to trend to help forecast where they believe a stock could trade at a certain point in the future. Looking at Palantir Technologies, an investor could make an assessment about the stock's long-term perspective using a moving average and a trend line. If they believe the stock will remain above the moving averages, which many believe is a bullish signal, they can extrapolate the trend into future using the trend line. And that's something that we do too. That is something that we do. We are trend traders. We are momentum traders first, and trend, of course, is your friend. So if we can follow the trend, we can follow the momentum, and we get at those beautiful areas where we can make big money. So Palantir is looking good. They brought up the technical basis. We like to use these news to see if there's anything big. Well, we already knew that the PLTR has been a fan favorite for many, many years now. And PLTR did come off these mega lows, but now that's doing this beautiful curling shape to the north side. The question is, how far and how long is this going to take? How long will this continue to head up? So if we look at the daily, we can see we are a bit extended here, but if we can create a base or another trend line like you've seen here, it created those new higher lows. It broke out of that area, but you had to have been very, very quick in order to be able to get to that. What's up, Stockalope? What's up, Predator? What's up, Norman Conklin? What's going on, guys? It's good to see everybody in the chat. Let's see. We got Predator saying, so weird, it sent me to the wrong meeting. Yeah, I know. I started the wrong... I started up the original meeting, and then I accidentally ended the broadcast immediately, and there was no way for me to get back into it. So it's my fault. I apologize for that. I probably lost a lot of viewership for doing that, but you know what? At least it is recorded, so we can watch this at a later time regardless. So I appreciate you being here. Let's see. The guy here still has a caterpillar on his face. That's me, baby. I think I'm going to get rid of that thing tonight, but we'll see. At this point, good news after the CEO had to step down and supposedly sell everything he had. That was in PLTR. Holy guacamole. Yeah, that sounds pretty bad. But now at the same time, new management actually can be a big push in the right direction for a company, depending on who the management is and if the previous management was so bad. So if the PLTR, now I don't know if this is true, I'm just reading what Stackalope sent if we're talking about PLTR. If that is true, that could be a very bullish sign for the stock actually, okay? Something like that happened, yeah. What's up, Jimmy Bright? I'm glad you could find us, man. Yeah, sorry about the mix-up today, guys. We always got to at least go through one error, one mess up. It's not a show unless something goes awire. All right, so that's PLTR. Let's move on to our next one. This is what a bigger than expected Fed rate cut would mean for the stock market. Now, I found this interesting because there are so many different ways you could go about this, right? You could go about saying, if they cut bigger, that's going to show that more people are going to be able to borrow, more people are going to be spending that money, more people, blah, 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 blah. It just ramps up. If companies have more money because they don't have to spend it so much on paying their mortgages, right? On their interest rates, right? If people are spending less on their mortgages and everybody has all this money, companies have less money, that's going to bring in more, labor force. That's going to bring in a lot more pump into the economy. The question is, there's a lot of people saying that shows instability. That if we go from a quarter to a half a point, that means that we are going into a recession. That puts fear into the market. So let's read this piece of article saying, hotter than expected readings on consumer prices and on some wholesale prices over the past 2 days have led markets to price in a higher likelihood that a Federal Reserve will opt for a smaller, more conservative interest rate cut in this September meeting. A bigger reduction could send stocks reeling. As of Thursday, investors were placing the probability of the Fed lowering rates by 50 basis points at its next meeting at just 15% down from the 44% chance seen a week prior per the CME tool FedWatch, which you can all go to that. You just go to cmegroup.com and you'll find the interest rates on here. And you can see right now, we are predicting that we're going to come down a quarter of a basis point by 57%. 43% think a 50% basis point is to be reduced. Some strategists have said a 25 basis point cut would be a more welcoming sign from a Federal Reserve. Another strategist reasons that Fed likely wouldn't cut by more than 25 basis points, absent recessionary conditions or financial crisis emerging. For everyone who's asking for a 50 basis point cut, I think they should really consider the amount of volatility that would cause in a short-term funding markets. This gentleman told Yahoo Finance. It's just not something the Fed wants to risk. So that's what they're saying. Because everything already seems to be priced in for a quarter of a basis point cut, if they cut 50 basis points, it's going to be a lot of volatility, a lot. Meanwhile, Wednesday consumer price or CPI report showed a core basis which strips out more than the volatility costs of food and gas. Prices in August climbed 0.3% over the prior month, above Wall Street expectations for a 0.2% decrease. The unwelcoming news on inflation will distract slightly from the Fed's renewed focus on the labor market, and it makes more likely that officials stick with a more measured approach to easing, beginning the 25 basis points cut next week. Okay, so as we've seen in the CME Fed tool, it's most likely that we're going to get a quarter. If we get a half a point, there's a few different directions we could go. If we come into this point, if we come into a point where we get a quarter of a point, I think we're still going to see volatility. We will still see volatility, definitely 100%. We will still see volatility. But if we get a 50 of a basis points, you're going to see way more. You're going to see people either panicking to buy or panicking to sell. Which way it goes, I'm not sure. I'm really not sure. From everything that I've learned historically, usually when the rates start to get cut, things start to go higher. But when rates get cut, that usually is an alarm that sounds. That's saying that there's something wrong, right? So do keep that in mind. I'm just reaching out to a couple more people. I don't want to leave them in the dark here. And I think we're gonna call it good on that story there. I really do think we're gonna get a 25 basis points, and I think we're gonna get 3 cuts this year. You know, I really think that we could get that. Let me just send this out. Sorry about that, guys. And then our next one is about the vote. The SEC is to vote here on part of the U.S. stock trading revamp package. So I found this to be pretty interesting. I don't know how much it's honestly going to affect us, so I wanted to read this out loud to you guys. The U.S. Securities Exchange Commission will vote next week on some of the biggest revisions to stock market rules in almost 2 decades, including how trades are priced and processed. The SEC commissioners are scheduled to decide Wednesday whether to finalize measures that would alter the way brokers, market makers, and exchangers' businesses operate. One would change the way stock exchanges negotiate rebates with brokers to attract more volume to their exchanges. Another would tweak minimum pricing increments for stock trades according to the agency's agenda. The SEC unveiled the proposal in the package in December of 2022. That's aimed at making market more fair and transparent. The effort was largely in response to the meme stock trading frenzy. A disclosure proposal was finalized in March, forcing retail brokers to release data similar to exchanges, wholesale firms, and alternative trading systems. But the most controversial measure isn't on Wednesday's agenda. The proposal would require market-making firms and major stock exchanges to engage in auctions for the right to process equity orders within milliseconds. It drew criticism from the likes of market makers Virtue Financial and Citadel Securities, wholesalers that take a significant amount of brokered trades orders. Okay. And then just on a second note, like a second part of that, it talks about these regulators here. Wall Street's top regulators due to vote next week on a proposed new regulations to allow the pricing of stock in increments of less than a penny, part of a pending structural overhaul of equity markets, a Thursday scheduling announcement showed. I want to read that again. So top regulators is due to vote next week on a proposed new regulations to allow the pricing of stock in increments of less than a penny. So you can exchange for less than a penny now. So I thought they already had that in OTC stocks. So it's interesting to see them trying to revamp that. The 5 members of the U.S. Securities and Exchange Commission will consider adopting new rules on minimum pricing increments known as stock market as tick sizes at a public meeting at 10 a.m. Eastern on September 18th. The proposal was among a package of new regulations like we just talked about. The SEC unveiled in December 2022 that together would amount to the biggest changes to equity market structures in nearly 20 years. The SEC, both buyers and sellers would obtain better prices if price change occurred in the increments of less than a penny. Very interesting. Stock prices which would not benefit for more aggressive pricing in this band are considered tick constrained. Okay. So yeah, we got a lot going on there. There's a lot to unpack there, and it's definitely something that when it gets implemented, it'll be very interesting to see just how much it influences our trading. Let me just go ahead and give you one of these. Rip tater chip. We got to reload. We just got to reload the screen. It seemed like it was a little behind, so that's one way to do it. Solar stocks were the big winner in last night's presidential debate. Now, we all know that there was a presidential debate yesterday, and I don't really care who believes in what and yada, yada, yada. All I care is if this person gets in, where is the money most likely to go? Or if this person gets in, where's the most money likely to go? And this right here is Donald Trump has not been much of a fan of solar energy. He said he supports it, but his real support lies in boosting oil and gas productions by cutting regulations. Okay, so he is more of the oil, the gas, the coal, as to where the Biden administration has always supported the solar. And you can see that in FSLR yesterday. You've seen a big pop through this downtrend. We have new higher lows on this. This is a nice stock to keep an eye on. What I really liked about this stock was this double base over here, double base, and then it popped up. Well, it just came back to retest this double base, right? And it touched it and it took off, and now it's making a new higher low here. So it's very nice to actually see if this stock is to do well. If Harris is to make it in, this stock could continue to do well. Now, that's not to say even if Trump got in that this couldn't do better, but if we're looking at more of a presidential volatility, this FSLR could possibly be there. I don't think I want to read too much into that because I'm worried that it'll be a little too political for me. So let's just read a little bit about this. Microsoft Cloud woes a warning sign for AI. So I'm all for AI. I'm all about AI. I'm go AI, go, right? But I always like to kind of equalize my biasy, right? I want to hear the negative things so I can kind of put them all in my head together and not just let somebody else spoon feed me some mindless, bullish or bearish bullshit news, right? I want to hear if I'm bullish, I'm looking for bearish biases. I want somebody to try and prove me wrong, because if they can't, well, then I have a overall bullish biasy and I believe in it. The strongest conviction is if you truly believe. So here is a negative count on AI. We recently published a list of top 10 blah, blah, blah. The reality is finally catching up on the AI hype as investors await to see ROI on huge spending on AI chips and infrastructure. Dan Niles, investment management founder and portfolio manager, during an interview with CNBC last month, called the decline in the Mag 7 stocks after Q2 earnings representative of a fundamental shift in the industry. He said, "I know it's popular to talk about AI because the stocks are driving the market, but at a certain point, you want to get a return on all this money you are investing. And if you forward revenue estimates is going lower, not higher, but your CapEx is going up, at some point, those two things are going to collide." And we talked about this before, about how every stock that's attached to AI is definitely overvalued, right? It's been so heavily inflated, and that's because all of your big time investors are banking on the future. They're waiting for all of their money that they've put into this thing to gain a return. So they put all their money in, they sit back, they relax, and they're letting it work. Now, the question is it working fast enough? Because if it's not, they're going to put their money where things are going to work. So this is what he said here. Now said that the major tech companies went through a digestion period after seeing a huge return during the COVID-19 pandemic days, and he expects the same thing to happen as we move into the next year. The analyst said on the equal weight bias, the broader market is up when compared with the Mag 7 stocks. He recommends investors to buy the stocks that would benefit from rate cuts. These includes consumer staples, utilities, telecom services, etc. And we talked about all those hot sectors yesterday. Niles said that the other 493 companies could drive the market to all-time record highs. For this article, we picked 10 AI trading stocks that are moving later in analysis fadings. Of course, we have Microsoft. I'm not going to scroll through all of these guys, but we all know what the AI stocks are and how to be invested in those, right? You could even just take XLK or a QQQ if you wanted to be in some of the best AI tech stocks right now, which, by the way, QQQ did make it over the 50-day moving average today, so congratulations to you, QQQ. So there is an AI chip growth story that kind of goes along with this, so that way we can see both sides. Semiconductor stocks have rebounded this week, led by NVIDIA and Broadcom. Let's take a look at NVIDIA and Broadcom really quick. Here's NVIDIA. NVIDIA back up above all of its moving averages, looking very fine. Now, one thing I do always want to point out here, and I was talking to everybody in the Discord yesterday about, does anybody else see that NVIDIA here is actually starting to form this beautiful looking, let me draw it out before I give it away, a bullish pennant. Look at that. Now, this is what I see here, okay? I seen this after it bounced off of here. I just drew a line, simple trend line. Of course, accounted for the Japanese carry trade kind of getting saved by the bell here. And we just see this, this slight downfall, but new higher lows being put in, new lower highs being put in. I would give this probably another 2 weeks. Another 2 weeks of trading, and we might get a definite answer on which way NVIDIA is actually going to go. I think that I mean, it's really not that much to ask for, you know. Give me some direction here, NVIDIA. But it's got plenty of time. Now, I always tell you guys too, the longer the base or the longer the trend, the bigger the move. And we'll talk about that very, very soon in the trades that I took. But we're going to get through just a couple more of these articles, and we can go on to that. So, however, the stock market today, the SOX, which is an ETF of the semiconductors, if you guys didn't know, surged 4.9% on the first three trading days. The way it advanced 8.4%. In a client note on Thursday, Bernstein Analysis Stacey said Broadcom stock and NVIDIA remain his top picks in the semiconductor sector. So Broadcom, which is still AVGO, we can take a little peeky gander at that. If you guys remember, the earnings came with a double surprise, double whammy over here, and everybody got so excited about this. It was very exciting. You can see here we are starting to form something that looks quite similar. That looks very cool. And now I'm just kind of throwing these out here to see. I still think they need more time, but I think in the long run, these are going to do very, very well. So let's go ahead and bring this back up. Okay, that's good. We're done. Now, this is the Occidental trade. So Oxy is going to be the ticker. Here's OXY. You can see Oxy, if we go all the way back, I mean, we're going to zoom way out here. You can see this is around, I believe, and I'm just kind of guessing here, where Buffett made his wager. This was a couple years back when he was making his wagers. And you can see that we have these highs and we have these lows. And if I just mark these lows out here for you, you're going to see the last time that we broke these lows, or that we were down this far, was about 2 years ago, guys. So when you see a big support line like this break That's a really bad sign for a stock like this, because not only is it below all of its moving averages, but all their moving averages are starting to curl down. This is a slower moving stock at 1.97%. And as you know, Warren Buffett, the titan, the trillion-dollar investor himself, actually put 13 billion bet on Occidental Petroleum, and now it's hitting that 3-year low. So let's just read a little bit about it. The shares of Occidental Petroleum have plunged 29% since mid-April and are down 15% year to date, trading just above the $50 level on Thursday. The price decline in Occidental shares coincided with a 23% decline in crude oil prices since mid-April. Oil has been under pressure due to the demand concerns tied to a cooling U.S. economy and excess supply thanks to record production from U.S. oil firms. The sharp decline in Occidental Petroleum stock is a blow to Warren Buffett Berkshire Hathaway, which has been amassing a stake in the oil producer since 2022. Buffett went on to buying streak of Occidental Petroleum in June, purchasing millions of shares around the $60 level. The conglomerate owns 29% stake in the oil company worth about $13 billion. The $55 to $60 level has acted as a floor for Occidental since Buffett started buying in 2022. So yeah, everything I told you was true back in 2022, right? And between 50 and 60. So he's been buying from here to here. So he bought anytime it came down and touched this area, guys. That was the Buffett buy zone. It really was. This is Buffett's line right here. And he just kept buying this thing up. Well, if he liked it at that price, he might like it at 42. We'll see. Or maybe he's selling. Maybe he was playing both sides of it. You never know. That's a tricky titan. There he is. Okay. Now we're gonna go into a little bit of actually, before we go to this last one, let's just go on a more positive note. I'm gonna show you my trades today. I'm gonna show you the trade I missed actually. So here's AXGN. I talked to you guys about this yesterday. This AXGN was a beautiful trade today. The only issue I had with it is when I got in right here on higher volume. I got right here in the morning. As you can see, I gotta put it on the 5 minutes so you can see it a little cleaner. So here is the 5 minute. I ended up taking this trade right here on that pop. This was its second time breaking through. But because of the sentiment in the overall market, I decided to take a small share size using the low of the day. I figured that would be a great stop, so this was the low of the day. And 4 pennies, ladies and gentlemen, 4 pennies is what got me out of this trade. Now, we could argue because I did not get in on volume. I will be honest, I was at work. I was trading on my cell phone, and I've been eyeballing AXGN for quite some time. Maybe because I took it on a lower share size, maybe I should have widened my stop a little bit more, but this is all in 2020. Or if I could have been in front of my computer, maybe I waited for the volume and took it on this day, on this 5 minute candle, which was the actual trade here. This is higher than average volume. This would have been a beautiful area, or because of this breakthrough on volume, this could have been a beautiful area as well. So I stopped out, no big deal. AXGN is going to be the one that gets away from me, and anybody else who took this trade, I really hope your money is fruitful. Next up, I took ANNX today. We took it right here at this base. You can see what a beautiful push on volume right here. Couldn't really get a better price on this ticker as it launches up much higher after breaking out of this humongous daily bullish pennant here, holding this 200-day moving average. So I don't usually take these. I look for more faster movers, but when you see a large trend or a large base and it's breaking out on higher than average volume, a lot of times those can be your bigger moves. I also am still holding CSTL. I took this yesterday after it broke through its daily trend line. And Stockalope, if you're still with us, I know your issue here, where you draw something on the daily and then you zoom in on the 5 minute or the hourly and it seems to be off. I will always use that hourly. I feel like an hourly gives me the in-between of what I want while still using the pre-market and the aftermarket trading. So that's what I like to use. Just to answer your question now, I know you asked it in the Discord, but yes, that happens to a lot of us. I think it's just how they group the information that you're seeing across your screen on the X and Y axis. When you draw these lines here, they're going to be a little different when you see them here. So I just use the hourly to really condense that. I'll throw this on the hourly here, and then I can move it and adjust it exactly how I want to, you know, while using the pre-market and the aftermarket trading hours. So I am holding CSTL. I'm up like 1R on this thing, barely. Let's see, I got in here. My stop loss is here at 28.66. So we're up about 1R on that, maybe a little more. But that's it. That's the only trades that I have. This isn't I'm not dropping tickers to watch or to play tonight, but if you guys want to see any of that, you can watch yesterday's video. So this one is going to talk a little bit about the negative bout on the overall market, and it goes on to saying since the U.S. Federal Reserve started initiating consensus interest rate hikes in March since 2022 to combat inflation, investors have been grappling with two key questions. Will these measures effectively stabilize prices, and when might the Fed shift its strategy? Recent development provides clarity at the Jackson Hole Economic Symposium last week. And pay attention to this, guys. Federal Reserve Chair Powell remarked that inflation has declined significantly and indicated a change in course. He literally said that. Okay, so we know for an absolute fact that they are going to change their course. The time has come for a policy to adjust, Powell announced. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balancing of risks. From March 2022 through July 2023, the Fed funds target rate range escalated from 0 to a quarter of a percentage point to that 5.5. While generally lower interest rates could stimulate economic growth and buoy investors, skepticism remains. Peter Schiff, Chief Economic and Global Strategist at Euro-Pacific Assets Management, expresses significant concerns regarding the Fed's forthcoming strategy shift. In a recent post on X, Schiff cautioned, if you thought inflation was bad when the Fed claimed to be fighting it, wait until you see how much worse it gets now that the pretend fight is over. I'm really curious what you guys think about this. Do you think that this was all just a pretend fight? Because his concerns now extend beyond inflation. He's saying it also highlights looming risk for the US dollar and the broadening economy. Schiff looked at the US dollar index, which measures the value of the greenback relative to a basket of foreign currencies, including euro, Japanese yen, the British pound, and the Canadian dollar, Swedish krone, and Swiss franc. The index was established in 1973, and the basis of the value of 100 reached a high of 164 in 1985 and hit a low around 70 in 2008. Most recently, the index fell following Powell's remarks, suggesting a policy shift. On August 23rd, Schiff noted the dollar index closed at 100.67. The index could easily sink below 90 before year end. Excuse me. The dollar's got me yawning. Boring. No, only kidding. To be quite honest with you, if we look at the dollar has been so damn strong recently because everybody has been using it as a safe haven, right? So the longer that we are in fears of some issues happening, people take their money and they buy the dollar with it, okay? Now that we are going to be cutting rates soon, you would think more people would be using more of this dollar, but because it's not an inflationary hedge any longer, or maybe that's not the right verbiage, but we are breaking these lows, which is very interesting to see the dollar heading down. Now, if I remember correctly, just last year we hit an inverse correlation. If the dollar went up, the market went down. If the market went down, the dollar went up, and vice versa, right? So as the dollar heads down, the market's heading up, so we still have that inverse correlation. So, we'll see. Where is it going to stabilize? Or does it not stabilize at all? That's the real question. So we'll see what happens there. We had 8 votes on the poll tonight. Let's just take a little peeky gander of what we got. We have, 9 votes. Now, yes, we are heading higher. 67% answered the question, do you think we will head to all-time highs? 67% of you say yes. 22% of you have said no, there's more pain to come. And 11% of you say, I don't know, but I love the show. Well, I can say I love the show too. Love being here, love reading the news, love doing a little bit of studying. And I tell you what, guys, if we look at the overall market, we'll just take a little peeky gander. If we look at the overall market on this daily, we talked to you yesterday about this humongous candle. The day before that, I said, look at this huge wick on this candle. Huge wick on this candle. This right here is showing a very bullish sign, but I also heeded warning that we're still below all the moving averages. What we would need to do is push through all of these and then see some continuation. And that's exactly what we did the very next day, as it looked like that 50-day moving average was going to come down, and we talked about the resistance at the 50. It did come down and got soaked right back up, met with a humongous amount of volatility that came with that presidential volatility that came into the overall stock market, heading the market much, much higher. And then today, very unexpectedly, we had a beautiful push to that continuation. Now, we could go into a lot of different things like the sectors, but I think we all still know the sectors that are still doing absolutely amazing is going to be XLU, which is your utilities. These benefit the absolute most when rate cuts start coming. XLU starts heading higher because they are the one that most benefit from those rate cuts. We also have the consumers staples, which is going to be your XLP consumer staples fund, is also back above that 10-day moving average. So that did very, very well. Now, XLV, we showed yesterday we were having some wicks off the bottom. Another wick off this bottom is showing that XLV, or the healthcare sector, is starting to shape up. So we'll see what that wants to do. Now, everything looked like it did pretty well, except for XLF did not do much at all. Still below a 10-day moving average. And of course, leading the push is real estate, holding much higher above the 10-day moving average, looking like it wants to take off. So with that being said, that is our news for tonight. We went over a lot of different things and a lot of good reasons, a lot of bullish reasons to be positive, to be excited about the future of the market and your financial gains that are to come, whether you're swing trading or you're long-term investing. Either way, I think now is a great time for me to be risk on. You know me, anything above a 21-day moving average, I am risk on. And I told you when I was risk on, I've told you when I was risk off, and you'll see in the long term exactly why I do this. I hope you guys have a great night. Sorry about the mix-up. Sorry about all the mix-up when I canceled the stream right when I started it. But I hope you guys have a great night, and we will see you on the way out. Peace. All right, guys. Yeah, it's never normal here. We always have to have some kind of issue in the background, and it's a-okay to have that issue. We're ending the poll. 67% say we're going to go reach new all-time highs. But I got to give a shout out to Norman Conklin. Thank you so much for stopping in, brother. Predator, I appreciate you showing up. Jimmy Bright, Stackalope, thank you guys so much for being here. And everyone who has not commented, I appreciate you being here. Thank you guys so much for being here. We will be on very, very soon. Actually, I should probably take a little peeky gander at the let me just see here. We'll see. Let me take a peeky gander, shall we? Let's take a peeky. All right. We're going to look at the schedule. Tomorrow is Friday. We don't have anything. I get the day off. Look at that. At least I believe tomorrow's Friday. Yosef, Mama, thank you. Norman, take care. Take care, guys. Thank you guys so much. And I hope you guys have an awesome weekend. We will see you guys very, very soon.